This is the big week for Nvda. You have about 48 hours before they announce earnings. I want to walk through what's expected, what is kind of the buzz in the market right now. I think there are some very hyperbolic takes that are just stupid, right? There are people that are trying to get your attention by any means necessary, saying that Nvidia is in the midst of a wipeout after what just happened. So we'll go through that. I'll explain kind of why the market is viewing these earnings as so important, which a lot of people might already know, but it does lead the market. Nvidia leads the market in more ways than one. So we'll talk about that. We'll also be going very shortly into Leopold. I don't even know how to say his last name. Aschenbrenner's new investments. This is kind of blowing up on X as well. This is someone that turned $200 million into $5 billion in a year. And he just bet against the things that made him rich. So we'll talk about that as well. I might make a full standalone video because I'm still doing some more research on it. But people are, again, being very hyperbolic about this, saying that he thinks that Nvidia, AMD, and a lot of these other companies are overvalued and they're bound for a crash and all this kind of stuff, which I think people are just misreading. Even though he does have puts on the market, puts on Nvidia and AMD and some of these other companies, I think people are missing it. But we'll talk more about that. If you don't mind, hit subscribe so you can see future videos just like this one. I appreciate it. Now let's get started. I actually just opened up a small 2x long position on MU stock, Micron stock. I just realized one of the platforms I use that's actually crypto related has stock trading, so you can actually use leverage, a different way of like options exposure. But Micron's quite expensive from an options perspective because you need 100 shares. This allows you to just 2x like a smaller position, so maybe I'll talk about that at some point. But the broader market is back and forth right now. The market opened about 40 minutes ago, and we have treasury yields jumping up. A little bit cautious because we saw high inflation last week. The market's recovering a bit right now, but it's a little bit shaky because we're going into Nvidia earnings. So right now, Nvidia is down. It was down about 0.2%. It's up about 0.3%, just kind of sideways for the day. I asked Claude, why not use AI for this AI stock? What are expectations? Because if you look in different places, they're slightly off. So consensus is about $79 billion in revenue, which is up about 44% year over year, 15% quarter over quarter. Earnings per share should be about the same as it was last quarter, $1.76 versus to $1.78, up 115% year over year. Data center segment is about $73 billion, gross margin about 74.5% versus the company guide of 75%. So the consensus guide going forward, they say this is what actually moves the stock. Consensus is about 85 to 87 billion in Q2 of the 2027. So next quarter, they're expecting revenue to jump about $6 to $8 billion. The whisper number is 90 billion. So above 87 billion confirms the Blackwell ramp. Below the 85 billion suggests decelerating, right? Which is what everyone's so cautious about within the AI trade. So Polymarket is pricing in a 97% earnings beat probability. Keep in mind they beat EPS in 21 of the last 23 quarters, but the stock still fell 3 of the last 4 reports despite the beats. So why is that? Well, everyone kind of expects Nvidia already to beat expectations. They want them to beat on revenue. They want them to beat on earnings per share. They want them to beat on guidance. They want them to beat on margins. They want some rosy picture, or they don't want to buy the stock. Now, is the stock expensive? No, not really. When you consider their growth, they're actually extremely cheap. If this was any normal business, they would think that this is a cheap stock at a 24 forward price to earnings ratio, growing 73% top line, and even more than that on bottom line. They think this is cheap, and they have a bunch of cash. They have $55 billion they're adding to it all the time. They're buying back shares about 1% a year. They're paying a dividend, but yet people are still cautious over deceleration of AI spend, about lowering margins, right? That's the big question. Do margins stay high, or is this just a commodity that will, they can command a high premium right now because everyone and their brother wants chips. Everyone wants to build out AI, but in 2 or 3 years, maybe Trainium's a lot bigger. Maybe Google's or Amazon's or Meta's, their internal products are better, and then they don't have to buy as much from Nvidia unless Nvidia lowers their margins. That's the question, right? So this is why everything matters. Every earnings matters, because this is what changes bears from bulls and bulls to bears, is like every quarterly report, because we're talking about, or at least the market believes, that we're going to see deceleration of AI spend probably in 2027, if not 2028, right? So 2 years from now, we're not going to have this ramping AI spend. So naturally, revenue growth will slow down. Everyone knows this, right? The AI companies can't grow at 100 or 200% a year for the next 2 years in their AI spend. So we're talking about like maybe 6 more earnings reports, 7 more earnings reports before we're in 2028. So the forward guidance is so important because we're looking at such a short time span. This is one of the reasons why I made a video recently talk about why I was investing heavily into Amazon, why I have $700,000 in Amazon, because it will take advantage of AI, but it's not like a quarter to quarter stock that you have to worry about. But you're also not getting Nvidia growth, right? You're not getting Nvidia up 70% over the last year. You get whatever Amazon's at, 50%, which is still great, but Nvidia has moved a lot before that. Amazon just finally moved up after being stagnant for years. So you have a couple different plays on this. You could invest continuously in these hyperscalers like Nvidia, AMD, or not hyperscalers, but these AI companies, Micron, and you're kind of trying to time the market a bit, trying to get a little bit of extra juice from it before it inevitably slows down. But you might say, well, AI is never slowing down. It's just going to continue to ramp. But the acceleration has to slow down at some point, is my point. I still think AI is going to be much more prevalent, and like Nvidia is going to be around in 10 years. They are, and they're going to be making lots of money, I think. But the thought process is their revenue growth will slow down, so it's going to become a cheaper company, because naturally you don't pay the same for a company that's growing 10 or 20% versus 80%. So that's kind of one way you can approach it. You can buy these AI specific stocks. You can buy the hyperscalers. You can buy like Amazon, Google, Meta. These companies will take advantage of AI, but they're not as exposed, but they don't have the upside that some of these companies have. You can always get exposure through ETFs, or you can go against the AI narrative and buy something like, industrials or software as a service, which has been doing terribly, but you could go that route. Now, personally, I have exposure to Nvidia through ETFs. I don't have individual stock exposure. I have big bets on Google, Meta, Microsoft, and Amazon. That's how I'm playing it. I'm okay not getting as much growth right now because, first of all, it helps me sleep better at night. Second of all, they're cheaper than some of the AI companies. Not cheaper than Nvidia, to be fair, but they also, I don't have to time in and out of as much. And there are other reasons too. I made a full video on why I'm buying so much Amazon. But I'm still watching Nvidia earnings because it affects everything. I have a lot of exposure through ETFs to Nvidia because it's the largest holding in just about every ETF, all the major ones. And also, I wouldn't be against opening a position in Nvidia if the price goes to the right level. So I'll be watching because there's so much volatility. The market's pricing in about an 8 to 10% move on Nvidia earnings. And recently it came out that Nvidia is not selling chips to China, right? Or China hasn't bought the chips, right? This is interesting because I know this affects their business negatively, that they're not selling the extra chips, but that's priced into the stock. So that now, if you're buying the stock now, there's potential upside if China eventually does buy the chips. Now, people are a little bit cautious too because of the time of the year. Typically, May to October during midterm election years is negative. Like we've seen that many times in the past. But I'm not letting that stop me from buying good quality companies at good prices. That being said too, it's interesting. Like so many people are so hyperbolic about Nvidia and AI and stuff like that to get views. This says Nvidia is bleeding after Beijing said no thanks to Nvidia chips. They rejected them. Okay, well, if Nvidia is bleeding, it must be down a lot, right? No, No, it's not bleeding at all. Like from the all-time highs that it hit last week, it's down a total 5%. Okay, that's nothing for Nvidia. That's nothing, right? It moves that much every single day. So I'm not concerned at all. I mean, you look over any time frame, a week, a month, 6 months, year to date, a year, 5 years max, it's all up, right? So don't let people freak you out thinking that the market's bleeding. Now, some people are looking at Leopold Aschenbrenner. He made a lot of money recently. Just a little background on him. I might do a full video on this, but you know what? Let's just include it in here. He owns a San Francisco-based hedge fund. They had explosive growth. They launched at 225 million, and they grew to 5.5 billion in just over a year. This is someone that was actually fired from OpenAI, which is interesting for like apparently leaking some information. But he turned a large amount of money, $225 million, into a much larger amount of money by betting on AI. It just came out, his 13F filing. He's betting against some AI stocks. So he bought 8 billion in chip stocks. None of these were in the last quarter. So SMH, he has 2.04 billion. Nvda, he still has 1.57 billion. Oracle, 1.07. AVGO, 1.01. AMD, nearly a billion. MEU, 600 million. TSM, 535. But here's the twist. Last quarter, he had a $747 million bullish call on Intel. This quarter, it's a put. What he added instead, Bitcoin miners pivoting to AI data centers, Applied Digital, Bitfarms, CleanSpark, IREN, Riot, plus a new stake in Hive Digital. So he's focusing on AI data centers and more of the picks and shovels plays rather than Nvidia and AMD. This is actually, I think this tweet was wrong. He has puts on a lot of the major AI companies. So let's look at it. His main targets include, for his put options, Nvidia, AMD, and Broadcom. He also placed similar bets against TSMC and ASML as well. So he has massive put positions on these companies. And then he bought, CLSK, Riot, INTC, etc. So is he bearish, right? Apparently he is, where was that? He's forecasting a massive crash with billion-dollar bets. I don't think he's necessarily forecasting a crash as much as he's hedging the market, right? He's made a lot of money from AI. It's gone up a lot. He's still betting on AI companies, like companies that directly benefit from AI continuing to proliferate, like these power companies. So I don't think he's like 100% against them. I think he's just hedging his bets a bit. I could always be wrong. Let's see. But yeah, he was fired for warning that China could steal their AI models, and then turned a small amount of money into $8 billion. This is maybe a better showing of what he actually has. He has the SMH VanEck Semiconductor ETF put of 2.04 billion, Nvidia put of 1.57 billion, an Oracle put of 1.07, a Broadcom put of 1.01, AMD put. Like, you can see massive amount of put options. The thing is though, this also does not show in real time what he's doing. This is delayed by 45 days. So we could be seeing him put on these put positions at the end of March, which was the best time possibly to have these because the market was down significantly, and he could have already closed them. So he might be a very active trader. I would assume he is for the fact that he turned $200 million into $8 billion. You don't do that by buying boring companies and holding onto them for a long time. No, he could be just trying to hedge a bit. So I'll be making a full video on this and be breaking it down more. I'll be using Claude too, looking through what he's done recently. So be on the lookout for that video. Let me know your thoughts on Nvidia this week. It's put up or shut up time for Nvidia because their earnings is coming in less than 48 hours or just about 48 hours. Let me know your thoughts on this underneath the video. Let me know if you're an Nvidia shareholder, if you're buying, if you're just sitting on your hands, or if you're selling. Thank you so much. I appreciate it. I'll see y'all soon. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.